steep correction led by multiple headwinds that we have actually seen in the market. How should one actually approach this mid space in particular? Is the froth over? What's next for it? Let's hear out what the market experts had to say.
A lot of froth, in that market in the smaller companies where a lot of operators also got probably active, and then, a lot of the prices were active. But then again, if you're just looking for 15, 20 stocks, there are a lot of opportunities which are emerging, right? I mean, for me, it's all about what is your long-term returns goal. If you're targeting 20% plus returns goal, it's almost impossible to make that in the large caps, right? So the only way you can find 20% plus earnings growth companies is most often small and mid cap space.
Small cap and mid cap index growth, especially the small cap index earnings consensus growth, is still between 50 to 20%.
I clearly am a proponent of large cap stocks. In fact, in this correction, your certain large cap stocks have become quite attractive from valuation perspective as well. I think my sense of what has happened is, if you look at the setup, there's been a general movement towards US away from EMs, but within EMs, so far, whatever's come out against China hasn't been that bad as it was initially thought about.
Big correction, so valuations is in your favor. There is a pharma space which is really looking good. Again, in this market, there has been correction. Gold finance looks pretty good. Home finance looks decently good. Luxury real estate, is looking good. And I continue to like, the building materials. Building materials, again, I think it's going to be a, really high growth time for a lot of niche building materials.
In healthcare and all, it's more of a stock-to-stock situation. So I would kind of, pick and choose. But in general, in our portfolio, we are still quite overweight on the healthcare space also. Structurally, we are always more positive on the premium end of the consumption basket, whether it's in services or products. Services like airlines, hotels, a lot of things to do with travel and tourism and other services. And on the other premium side, you have spaces like gems and jewelry. You have high-end auto, high-end real estate, etc. So those should continue to do well.
Consumption incrementally is where one should look at not just staples but otherwise discretionary. Although that's a space that we currently do not have, but consumption in general is a place that one should look at, because this is a space which has been largely ignored over the last so many years in the large cap consumption space. Right now, it doesn't really look like commodity stocks have done so much. There's been a lot of worries around tariffs, etc. As things settle down, I think valuations over there are also looking all right. Banks is what we like, but we do not like it as much as we used to.
We upgraded post-budget consumer discretionary X passenger vehicle overall, and we, you can say, booked profit or neutralize our overweight on industrial sector. That made us overweight now on financials, consumer staples, consumer discretionary X passenger vehicle, healthcare, and real estate.
All right, so quite some of the themes that the market experts like at the moment. Consumer discretionary looks like one of the prominent themes which major of the market experts like at the moment.